Hey everyone, good morning. Happy Saturday. Coming back with another portfolio review. I know it was only like a week ago since I did my last one, but big updates in a sense to update you on. I think I literally uploaded one Monday this week. So we'll probably get another Monday one uploaded. So you'll see this on Monday is what I'm saying. I'll have that scheduled. But just wanted to go over some things and what's happened the last week and kind of where my progress is and if I accomplished my goal that I said I would earlier this week. As you can see, we had some gains yesterday. Went up $182. If we look at the last week, for where we were, July 6th, that would have been Monday, yeah. So let's just take it. No, we'll stick it the week. So it went down, and then basically in the last day it went back up. So we're right where we were a week ago with no major progress. Outside of that, I've gotten some dividend payments. Just waiting for it to load. We'll see if it does. But Mazda, which I sold off quite a while ago, apparently I still got a dividend from them because I held them at a certain time. And I was supposed to get like 7 cents or something from them. That's the one that's like right here, and it's a big secret what it is, but they changed it to 25 cents because, well, not like 25 cents per share, but like overall 25 cents because of the rounding. But that's the one that doesn't want to load. But yeah, so we have a decent amount of money sitting in our ready to go cash, $28.54. There's just nothing that I want to buy right now for that low. I mean, I don't think there really is anything. I could buy like a share of something or a fractional share of something. Could always be an option, but I'm just gonna wait till I deposit money and then I can actually buy some shares again. I hope to start doing that next week. Well, not next week, but when I get paid next. And that'll be really exciting because there's some good opportunities right now. Like if we look at JP Morgan has dropped quite a bit in the last little bit. I think I bought it like around here and then it's just kind of slowly sank down. So I have an opportunity to kind of lower my average cost. Wells Fargo is always I like to invest in. They're at $25, which my average is 33, which it says it somewhere. Maybe not. But somewhere I was able to, I think it says it on the app because it's just configured a little different. So I could drop it down a little bit more as well. A lot of people are saying, well, not a lot of people saying to me personally, but in general that Wells Fargo is a riskier one and they're probably going to cut their dividend, which is fine. I'm at the point in my investing career where if a company cuts their dividend, it doesn't affect me as much as it will, say, later on. I'm not relying on this income to sustain myself. Like if we just take a peek back at the the history, the dividends, all these, man, it is, yeah, there we go. This is just money that is essentially, I don't want to call it free because it's not free money, but there's the Mazda one, 25 cents. But all I'm doing is putting a money in an account, investing in these companies, and they're paying me for holding their company. I could make decisions for their business stuff, but I don't really own enough for that to be meaningful. But as I've told before, like this percentage of money that I have pays me back way higher than money in like a savings account. This is riskier, higher risk, higher reward, but that's the way I look at it. And if Wells Fargo cuts it now, they're going to raise it later, and that's okay with me. Now, if I was living off these dividends and, Wells Fargo cut their dividend by a massive amount, when we get to, we'll just peek ahead. So if we look at Wells Fargo, they're paying me $46. That is a fifth of my income is coming from Wells Fargo. And if a fifth of my income gets cut to become a tenth of my income, that's awful. So, but as of right now, I am just growing the portfolio as much as I can to eventually get to the point where it starts compound interesting on itself and it starts growing. And eventually then I can hopefully retire from these accounts. Now, as far as if I will continue to have two brokerages, I'm not sure. I like both apps. They both do very similar things. Does it really make sense to have two different accounts? No, but I'm sure that's something that I will figure out as the bridge comes, but I like both. They both do two different things for me. This kind of allows me to pick my own portfolio and look into companies where this is kind of a pre-selected one, and I'm just following it and investing in, and it automatically does the investing for me. So this is kind of more of a passive, more so a passive one, and this is more of an active one for me. So I like them both for that reason. Yeah, so that's the main thing that I like about them. So again, not major updates between both of them because I've been focusing on one other thing in particular, which we'll get to in the net worth tracker. We always finish it off with that. But for people that, discover my videos and this is the first one that you're coming and seeing, welcome. Thank you so much. I always appreciate people that come and watch my videos. But some people might not understand my point of view, my frame of reference, why I do what I do, where I decided to do what I do. This Robinhood portfolio is 100% me. I've heard of these companies. I was like, I'm learning about investing. So here we go. Bam. This M1 finance portfolio was mirrored off. I'm drawing a blank. Joseph Carlson. Thank you. See, I put that in there. Was off the Joseph Carlson YouTube channel. And he introduced me to this portfolio. I sold off what I originally had because it was awful. It wasn't doing anything. And as soon as I think it was like right around like here is when I don't know when it was. But basically I sold it off, rebought it into these companies, and it's just done a lot better since. It's actually had growth, which is what I was looking for. And, he's changed his portfolio. He's sold off companies. I've kept all of them because, like I said, he is at the point where his portfolio is making a bigger, sizable contributed portion to investing, where this isn't for me. And like I said before, Wells Fargo is a fifth of my income. If that gets cut, down the line, that could be bad. But for me, it doesn't matter. It's all about learning and stuff. And there might be points when I do decide to sell off some of these companies because I just don't see the value in them anymore. But we'll wait until hopefully things start to pick up, and instead of companies being in the red, they'll be in the green, so it'll be a little bit easier to swallow selling them. Although you do have, I think it's like $3,000 you can take off on taxes. But anyway, about that. So since July started, we've gotten a couple dividend checks here. A decent one from Merck. Considering the other ones around it, I mean, Robinhood, I think a $10 one is nice. Now, over on this one, I think $1.50 is pretty good. But, 80 cents right here is always helpful. But, just pennies here and there really help. And I have a cash balance of around $20 as well of money that I have not invested myself. So keep that in mind when viewing this. Right now, they switched the auto invest to $25. So if I don't get a chance to invest and I get, $4 more, they'll auto invest it, which will be the first time dividends have started to buy more companies for me. Now, if I waited long enough, I'm sure it would have happened sooner, but I was very consistent about every 2 weeks investing money. If I can get to the point where it's investing before that 2-week time of me investing, that's going to be huge. But right now, it's taken a while. It was pretty much all of June, and it didn't really do anything. So that is what it is. But yeah, if you ever want to look through this portfolio, leave a comment, and we can go over it some more. Otherwise, I can link to where you can view the portfolio in a different way. But for now, we'll just leave it like this. So this is a spreadsheet that I developed for myself. I created this. I added the ticker symbol, the company, what I bought the company at. So this is either what I bought the company at. I think, there we go. There's one share of Duke. So I bought it at $86.85. Now, if we compare that to Wells Fargo, I've overall averaged $33.45 for all my shares combined. There's been some higher, there's been some lower. The average is that. So that's kind of where I have this. I might change it to average buy price or something, but for now, that's fine. This is the current price, what they're sitting at. It's can be slightly different. So 4 to 607. This is 610. It's a little different, but it's very close, and it gives me a really good idea when I am looking to dollar cost average certain companies. This 52-week high and 52-week low is just a reference point for me. When I'm looking at this $81, I'm thinking, is this a good time to buy more of Duke? Well, it's been $20 lower. It's been $20 higher. It's right in the middle. So we have an opportunity to lower it a little bit and still not hurt. There's been times where I've been buying companies that are really close to their 52-week high, and sometimes it can continue to go higher and higher and you won't even know, but sometimes it can also go lower. But just another reference point for me. Number of shares, my cost basis. So if you look at the math, C2, so my buy price times the number of shares, figures out how much money I've invested into each company. The market value is basically the same thing, but it's the current price times my number of shares. And this is where I then figure out my gain and loss. So I've invested a lot of money into Wells Fargo. It's dropped. Not a big deal. It doesn't bother me. I'm down close to $200. It's fluctuated between $150 and $200. And I continue to buy this company despite me being so much in the red, because I know once everything is better from this virus and banks are back to normal, the interest rates are at a better profitable margin for them, Wells Fargo is going to soar. Like, they were sitting at $55 for a while too and growing. And $22 was like at the bottom of the coronavirus being hit. And that's the same thing with a lot of these other companies. Some of these ones that you'll see right here, Royal Dutch Shell, Delta Airlines, I bought them at like the bottom of the coronavirus base, and then they've kind of gained money since then. So right now, Royal Caribbean is kind of I did really well. I should have bought more, but you can't know, and that's why you diversify, because even though I could have just went all into Royal Caribbean, that would have been riskier, where I've evened out spread out my diversified, there we go, my investments. I'm still positive on all of them, just not as much. So it's a balance. And then I keep track of the sectors, because I do have this sector percentage, just so I can at a quick glance see, wow, I probably should get more real estate, more utilities, more communication, more industrials, etc. And be like, wow, I should probably slow down on cyclicals, because that's what's probably tanking my portfolio. And wow, I have a lot of financial, and ETFs are just a way to balance it out for me, even though that's not a sector. It's just something for me to keep track of. I have a couple ETFs. And then I keep track of the number of stocks, because eventually, once this does get to a bigger portfolio point, I want to try to keep certain number ranges. And then money spent as well, so I can see at a quick glance how much money I've spent in each company. And as you can see, my big heavy hitters are Wells Fargo by quite a margin, JP Morgan, Coke, and Altria Group. Had to get some water here. So then tab 2 is my dividends. This is where I keep track of my dividends. I have a projection, which I saw in a video and I loved it, so I wanted to copy that idea, and I have pretty much updated it every time I bought money just to see the progression. If we take a peek back at the beginning of this year, I was projected for $50 for the total year. Now, if we fast forward to today, we're up to $257 for the year. Now, as the farther this goes out, the less accurate it becomes, because we've passed some dividend payouts, and I may have bought a company that paid out earlier in the year, and like JP Morgan, they probably have already paid out once or twice this year. Excuse me, I need to pause for a second. Yeah, my throat was starting to get dry from talking, but they may have already paid out twice this year, and I won't see those two payments, so in the end I may only get $7 this year from them, opposed to the $14, but it's still fun to see, and it's also a good projection for next year too, to see where I'm at. Every month or so I do check Seeking Alpha to see if they've changed their dividend at all, because I know some companies have. Alright, had to drink some more water here. So I may only see half, but it's still a good projection for this year and for next year. Probably covered it, but I just wanted to go over it again. So over here is where I keep track of my actual monthly dividends, and it is growing month by month in a sense, which I've talked about a couple times, and I'll point it out again. And for the year, I've already made / projected for $70. So I do tell people that getting paid dividends is in a quarter cycle. Each company kind of has their own point at which they decide that they want to pay out, but most companies pay out at the end of the quarter: March, June, September, December. There's some companies that pay monthly. There's some that pay twice a year, so that'd be June and December. But as a pattern goes, it's low, low, high, low, low, high, low, low, high. So you can see where the trend is going. But you can see that every quarter I'm growing my money, which is another chart that I might decide to do, is quarterly dividends. Right now, there's not a whole big point to do it because there would only be 1, 2, 3, but I still think it'd be fun to do so. How I'm going to figure out how to graph that, I'm not sure, but maybe we'll do that for the next video, or I'll find something in between to do so. But already for this month, I'm at $15, which compared to last month is about half, a little bit over half actually. But, you know, considering April and May were at $7, which at that point I'm like, wow, that is really good for just a month that's not at the quarter peak. But now we're sitting at 15. I'm not sure what next month is going to be, but that'll be really exciting to see, at least for me. You know, some people are like, I get $70 in one dividend check. Well, good. You probably have a lot more money invested, but for how much I have invested, this, you know, makes me really excited. And it sucks that I haven't been able to invest in the last month, and we'll say about a half. And we'll talk about that at the end, but yeah, this is where the progress is going, and I really like it. So we'll probably continue to talk about this more in the future, but, you know, started from 2 cents and here we are now. So yeah, all of October, the only check I got was from General Electric for 2 cents. Yeah, we'll get back to that another day as well. So taking a peek at the M1 finance portfolio. So I do have 2 spreadsheets to keep track of 2 different brokerages. The first one I made, so the whole spreadsheet that you saw on both pages were all developed by me, 100%. I, you know, took my time. This, however, was developed for the Joseph Carlson show. Since I'm using his same portfolio, I'm using his same platform and companies, I'm like, well, why not use his spreadsheet that looks like a very successful one and use it to my advantage? And so I have. So this can only be updated at the end of the month when I get the like the sheet that tells me, you know, the information about it. Since I'm buying full stocks on this one and this one is fractional shares, I can't really track them the same way. So this one is based fully on like percentages and averages, and, you know, we'll kind of go more into that. But, you know, I plug in the month, the year, the amount of income I've earned, so the dividends I've earned for that month, and then where my portfolio value ended. And these go into a bunch of numbers and stuff that I don't know how to do, and formulas to figure out month over month the growth rate of my portfolio. This darker section then figures out my average monthly income, the actual and the annualized average, which is very nice to see kind of where my portfolio is growing, which is really awesome. So, you know, there was a point when a lot of these dots were over the average, but since I had such a good month, it raised everything up. So now, you know, my average income for the year should be around $117, which is getting closer and closer to the accurate amount that this, you know, the sheet tells me at the end of the month. So that's really cool to see. And this is just kind of 2 ways to see the same amount of information. You know, the 1, 2, 3, 1, 2, 3, 1, 2, 3. The same thing applies for this brokerage as it does for the last one as well. Is you're going to get paid a lot more in June and December compared to the rest of the year. You're going to get paid more on the 3rd month of each quarter than the other 2 months. And it's just how the cycle goes. So you're going to have months that are lower than the previous, but that doesn't mean that you did something wrong. It just means each company pays out a little different, but there's some that pay monthly. But in the end, I want the graph to go that way. That is the way I want it to go, is the way I want it to trend at least. And that's the big important thing. And this is, again, the chart for my income. This is the exact line. Like, if you could put that line on that other, like this line on this chart, that's exactly the way I want my income to go. And, you know, the up and down, the fluctuation that happens. And then you can see my portfolio value in the last month. It's kind of just flattened off, and we'll get to that in the next page, kind of why that is, what I've been working on, what I've been focusing on. So, but yeah, basically this gets more coverage at the end of each month. Since we already did June, the next time you'll see a big update on this, and we'll talk about it a little more, will be July. All right, the last page that takes me a little bit longer, my net worth tracker. So, as you can see, if you haven't seen it in a bit, I have updated this sheet. I've now separated it year by year with just different colors, just so it's easier for me visually to see like what I've done in the last year to, progress. So I started my journey of tracking everything back last June. And this was before I started investing, but this is more so when I took out a watch loan, took out more collateral on my car, which didn't have much to begin with. Before I was really financially invested in everything. Clearly I had some idea on what to do. I had some in savings. That is a lot higher than the average. But as we slowly start to go down, you see that I've kept right around 1,000. Now, why would that be? Dave Ramsey recommends when paying off debt to keep $1,000 in your emergency fund. And I could have my money work a whole lot harder in these accounts right here. And that's kind of what I've been focusing on. So in this last year, I didn't make a whole lot of progress. My loan went down 1,000 here, went down like $700 here. But I started investing. And I started a retirement account because I just wanted to get as much money as I could, which between these three accounts, I had $2,800. Very respectable to start with, at least. Still kept quite a bit in my checking, kept quite a bit in my savings, and I was just at about $30,000 in total assets. But why did I have a month that went backwards? Well, because Christmas, and I spent a lot of money on gifts, and I paid it all off, and I took from my savings to do so. This year so far that I've had has been one that I couldn't have even imagined. At the beginning of this year, I had $2,000 in both my accounts. And my goal was to have $10,000 in investments, 5 in each, and pay off all my debt. On paper, I said this in the last video, it was a $23,000 goal. I have never made more than $23,000 in a year. But due to switching jobs and making more money, like basically doubling my income, close to getting a nice tax return because of other choices that I've made in my life, and also the coronavirus and getting Trump bucks, I was able to, in 6 months, 6.5 months, we'll say, I paid off my watch, which went from 5,000 down to 0. I focused on that, and you can see from 1 month to the other, it dropped $3,000. That was the tax return piece. And then the stock market dipped quite a bit, and that's where I kind of tapered off because I aggressively put into these portfolios. But then once the stock market was at a low and it wasn't really dipping anymore, I decided to continue pushing back on this. Once my watch was paid off, then my focus went to my car. And as of earlier this week, and when I got paid, I paid it off completely. I sold my Mustang for $7,500 to my friend, so I still get to see it and drive it and whatnot. So that's pretty cool. $7,500 in my pocket went straight to the loan, and then I got a check. I paid it off, like my payment from work, and I pulled some from my savings to pay it off. 100% debt free. I've accomplished one goal already this year. Morning voice is killing me, I tell you. So I paused again. So I've accomplished one goal so far in paying off my debt. $15,000 in debt. That doesn't happen by accident. You have to try really hard to do that. And I am only an arm's length away from getting $10,000 in my portfolio. And it is going to be a whole lot higher than that. I tell you that. It is going to be a lot higher than that by the end of the year. So with that, I am at 8,800. So because of the market fluctuations, I'm a little bit lower than that. But I need $1,000 of personal money invested to get to that goal that I set for myself. And with that, my assets are completely my assets. There's nothing, subtracting and negating or whatever. It's 100% mine, and that's just awesome. So as you can see, my growth has really skyrocketed. I think this is about the point. Let's see. 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7. So yeah, this is pretty much right when I became really focused at doing what I needed to do, and it's really grown since then. And I know once I'm able to just grow wealth and not have to pay off debt, it's going to grow a whole lot faster. And this has been the big accomplishment for me the last couple episodes and talking about it is, I made a video before. It's paying debt versus investing, and accomplishing goals of paying down debt, and now it's just going to be pure wealth building. I know I talked about in the last video about potentially taking out a house mortgage. It did not work out in terms of I didn't get approved for really what I was hoping for. At least in my town, houses are, in my eyes, expensive for what they should be. I know in California it's a whole lot worse. I get it, but for me, $200,000 house is pretty expensive to start for something that's pretty small. I was approved for $165,000, which is, I guess, a good starter home, but it gets you pretty much crap in my town, unfortunately. Plus, I would need 5% down, which is $8,000. And then on top of that, with me only being at 72 hours a week and my job being unstable, they actually weren't able to approve me, which is fine because I was kind of on the fence between buying a house and renting. And I am totally okay with renting because it doesn't tie me down. It doesn't put anything in this column for a while. And I can just focus on this and getting what I need to done. And with renting, I actually have more money at the end of the month in my pocket, which means these accounts are going to be benefiting from that more so than me having to take out a huge loan for a house. And I wouldn't see any progress on that as far as wealth building until like 10 years from now. So not a good spot to be, but I'm going to continue to grow this. I'm going to continue to give you guys the updates on it. Last shot I have to show you before we end this video is my debt snowball paid off. Now, for some people, they have like 10 lines in this. For me, I only had 2. I've always been very woke, as the kids say, about money. I don't know why. I just was. So for me to not only be able to do the debt snowball and the debt avalanche all in one makes my mathematical mind happy that I was able to pay the highest loan, the lowest balance, and the lowest interest, highest balance first in that order, or second. So this is done. I'm going to keep this tab as a constant reminder that I worked really hard to get to this point. It's just hard to believe that within a year I was able to pay off like nearly $17,000. I'm pretty sure. Yeah, $17,300. And in one, 6.5 months, I was able to pay off $15,000 plus still be able to invest. It's been a really good year despite everything that's happened in the bigger world. This has been a good year for me financially, at least, and I'm excited to have it grow more. And I want to thank you guys for joining me on this journey. Anyone that watches this video, it's always appreciated. Any comments you guys leave, I do respond because what else do I have to do, But thank you guys so much. Have a good weekend, or hope you had a good weekend because you guys will be seeing this on Monday. And I can't wait to see you guys in the next video. Take care.